Hey, thank you everybody for joining me at this video presentation. Let me first introduce myself. I'm the chairman and CIO of Cohen Company. Cohen Company is an asset manager, uh, among other things, that manages approximately $3 billion of assets, as well as having been involved in launching SPACs for over 10 years and having sponsored ourselves the Insurance Acquisition Corporation series of SPACs, our investment fund, Valar, which invests in SPACs, and I myself have been CEO or chairman of all of the fintech series of SPACs, fintech acquisition corporate series of SPACs. It's given us a viewpoint on the SPAC marketplace, and we feel like we've learned a lot over the years. The marketplace has obviously changed over the years, and hopefully I'll be able to share with you some of that experience and explain some of the dynamics of the SPAC market today and how it really has developed. So, just in case you don't know, a SPAC is a company which is formed and launched publicly in order to acquire another company and essentially take it public. There are lots of reasons why companies would prefer to go this path rather than the traditional IPO path. Today, the most common reason is frankly that the companies view that there are more substantial discounts associated with the IPO that are even greater than the fees and the promote shares that sponsors get related to the SPACs. And Another reason is that it's a better transaction from a mergers and acquisition point of view because of the structure of the company. The company can use the substantial sponsorship that a group like ours brings, having done 9 transactions so far, including 7 de-SPACing transactions. A de-SPACing transaction is when a company merges into a SPAC, and that whole entire process of raising additional capital into the combined entity and then launching it public. And we think we actually have a relatively unique viewpoint on this because we've been involved in every aspect of the SPAC space, let's say. We started out as initially helping to launch and underwrite SPACs. We've invested in the IPOs of SPACs. We've invested in the private placement of SPACs. We have taken so many companies public through numerous environments since 2015. And we're fortunate enough that all of the companies that we've traded public have either been acquired at a substantial premium to the initial price or are trading above $10 and some well in excess of that. So we think that we got into this business because we thought there were a lot of great companies in financial technology and insurtech that were ready to go public with whom we had relationships with. And we've proved out that thesis over time. So I'm going to just look at the rest of the time that I've introduced you to talk to you about what I think or we can share with you as both sponsors of SPACs and investors in SPACs. And we find that there are good opportunities on all sides. And then I will share with you the risks that we see of being both sponsors in SPACs and investors in SPACs. So ultimately, we think the opportunities are to participate in an exciting process of taking companies public that are just great companies, companies that are involved in changing the way people live, in administering technology that helps change the way people live, that change the way that people pay for things, and capitalize on an increasing credit card and business to business and business to consumer and consumer to business payment network opportunities that participate in the acceleration of the user experience in financial technology over the last 15 years, as we've seen. And we've been fortunate enough to take companies that have profited over that by doing that public over the last 5 years. Most recently, well, maybe not most recently, actually, a few transactions ago, the most recent one to actually close and launch with its new ticker symbol, MILE, was Metro Mile, which is changing the way people pay for auto insurance. And we believe that there are a lot of companies out there that have strong revenue growth models, strong revenue growth histories, and strong revenue growth opportunities, and the ability to either grow their EBITDA substantially or develop immense streams of cash flow in the near future. So ultimately, it comes down to the opportunity that investors have to invest in companies that are growing, profitable potentially, will be profitable in the near future, and will create real value for investors overall. This and the role of the sponsor, where we've done a large number of transactions, probably as large or as many or as anybody involved in bringing companies public in this way. The role of the sponsor is really to help identify and do due diligence on these companies, and make sure with the expertise that we have in certain fields, that the companies going public are companies that should be public and should be good growth companies overall. We believe that experienced sponsors are really able to contribute to the process. And if you reach out to us, we'll be happy to share more with you. I want to go over to the opportunities that we see of investing in SPACs, which are substantial. Obviously, seems like there's a large wall of capital approaching the SPAC market. And part of that is just that we're in an era that there's the opportunity for a lot of good companies who really show amazing prospects to go public. The opportunities are tremendous because, they often, what's nice is that in the IPO process, you're able to purchase units, which include a fraction of a warrant, and to be able to profit by identifying those sponsors that will be able to close transactions quickly with high quality companies that can have solid funding, underwritten by the largest institutions in the country, Fidelity, Wellington, Capital Research, and others, as well as funds that can identify great opportunities. There are opportunities to invest both in this initial public offerings, although they're wildly oversubscribed today. So there's bigger opportunities probably for people who have been long-term investors in the SPAC market than newcomers in the SPAC market. And there are also great opportunities for longer-term investors to be able to differentiate well between the various companies. The second thing that I would point out is that today there's a great opportunity to invest and to hold these shares into mergers into great companies, as well as to invest for institutional investors and large investors in private placements of companies that will have liquidity in a very short period of time, that are private investments in public equities, pipes, and that subject to funding and the registration of these shares provide a way for people to get into companies and to support the transition of companies, the SPACs from being SPACs to being real companies, and the private companies to being public companies. So we see a lot of opportunities there. That having been said, I said earlier that I would touch on what I thought are some of the risks here, because we have a very ebullient market where not all the companies will be able to achieve their business plans. Many of the companies are companies that are projecting substantial revenues only 4 years out. Other of the companies are in very experimental sectors where adoption of their product has not yet been shown to have traction. And inevitably, there will be sponsors who, in their rush to take companies public and exciting opportunities, aren't able to fulfill the responsibilities that they have to do proper due diligence on these companies. And there will be problems, but that's a problem that faces every new issues market. And if we think about it, that there's always a risk, because IPOs are not really an end of a transaction, but they're really the beginning of a public company's life. And there will be problems and mistakes and projections that are not met. But overall, our expectation is that companies that are identified by good sponsors, that have good business plans and the ability to move forward very nicely, will do well. So I hope that you have the opportunity to contact us via our webpage at www.cohenandcompany.com, or directly to Brad Marvin, one of our key representatives, bmarvin@cohenandcompany.com. Thank you very much.